Good morning, good afternoon, good evening, all over the world. Dobson 777A here. I looked at my reports, and the last time I did a comprehensive video for you rather than just a live stream was May 5th. And at that time I was saying, looks like we're about ready to take off based on the charts that I put together. And I was looking at, a bunch of pennants and wedges and things, and it looked like we were in everything about to go. And lo and behold, this report's going to kind of confirm that, yeah, we're moving out, and we had a fantastic day today. But I wanted to start with first this article talking about the Biden administration's not going to define the pipeline attack as terrorism. We saw the same garbage when Obama was in office. They had, workplace problems, where people were getting shot up, and they didn't want to call it terrorism, even though the guy was just short of saying Allah Akbar. You know how that works. But in any event, we actually, in this case, the pipeline guys paid these terrorists. And why would you think that this isn't going to happen again? I mean, think of the amount of damage it did to the economy, the whole southeast of the United States. And they paid off these cyber terrorism folks. So this is politics, folks. This is really disgusting, actually. And you should read this. You should read this article because I found it quite fascinating. So let's go hit some of the charts. So about a month ago, I was showing you this 30-year Treasury yield, and this actually goes back to 1990. I had increased the time period of this, and I was noticing this trend, and I noticed that it would like level off, but even this was like a downward trend, and it would step down and kind of level off slightly, but slight downward trend, step down, step down. But we noticed we were bumping up against this upper limit. And this was probably a little bit over a month ago when I first showed this chart. And then I updated it on the 8th, and I added in some prices of gold specifically at this time to see if there was any correlation. And I was kind of predicting that it looked like by 2030 or something we were going to be down, probably below 1% yield. Now, on 4/21, we noticed that it did hit this upper limit and come down. And I thought it would be good to take a look again and see what's happening. So I pulled this up yesterday, and lo and behold, it came down, but now it's going slightly back up again. So we're going to have to watch this and see what happens, but we've had a couple double peaks here previously. You can see this is not uncommon. In fact, this was like a triple peak before it collapsed. But like a little small double peak came down. This actually kind of came quite a ways outside. But the metals have been marching on even though this is coming up slightly. So I find this actually kind of interesting. So the first chart this is gold. I guess we're basically looking at a year. And I thought it was interesting when I look at the 50-day moving average, and then we look at the 200-day moving average. We finally crossed above the 200-day moving average, and this is a really good move when this happens, and we should start seeing gold do very well. In fact, we're at 1872. Let's look at the chart overnight. We're actually, we ran up today, and it looks like we're starting to take off again for both gold and silver. So anyways, that's gold, and that's looking at over the past year. Now here's silver, and silver is now actually trying to get back up here. You can see how close we are to the highs that we had back August last year. It looks like we're trying to get there. We're awfully dang close. Ignore this little candlestick here, but I mean, the previous high was somewhere in here around 29, and we're at 28.5 right now. So silver's doing great, and you can see we're way above the 50 and 200-day moving average. Now platinum is the one that's actually done fantastic. Here's the 200-day moving average, and look at the separation that's happened for platinum. I mean, this is back June 2020, a year ago. We were at 792, and we're now near 1249. So that's a nice run up, and it looks like it's not stopping, folks. Now this is a busy chart, but I wanted to overlay. This is over the last 3 months, and I wanted to kind of show Bitcoin on here, and you can see that Bitcoin was up as high as 24%, and it's down 14% right now. So that's a 38% drop from its peak. So right now, Bitcoin is 14% over the last 3 months, negative 14%. Platinum is negative 1.77 over the last 3 months. Silver is up 4%. Gold is up 5.28. So gold is actually beating silver. Silver is going to run up pretty quickly. And you can see SPY is actually beating all three, but these are running up very fast to catch SPY. It wouldn't surprise me to see us start blowing out now. Now, here's our famous, infamous pitchfork chart. And you can see that we had been running in this channel doing very well, and then all of a sudden we blew out the top, and then we corrected down, and gold is back up in at least the outer band, and we're going to have to see if it gets back into the green area, and it's going to have to get up to about 2,000 to get back up to the center line. So we'll have to see what's happening, but it's actually crossed the 50-week moving average now, which is a very positive sign. I don't know if you guys saw the stuff that was going on with Saturday Night Live and Elon Musk. He's like bouncing back and forth about Bitcoin and Dogecoin and others, and it's really kind of confused the whole bunch of people that are buying this. But isn't it kind of interesting when I overlay Tesla and Bitcoin over the last 3 months? Check it how they're very much seem to be intertwined here. So as Bitcoin is crashing, so is Tesla, and they're very closely matched. I wonder how many people have seen that correlation. I don't know. I find this quite interesting. So anyways, let me know what you think. But okay, I'm going to give a filter view of what I normally give my beyond subscribers, we'll say members. And I kind of recommend the platinum and gold memberships because you actually get to see some of these ticker symbols, and I wanted you to get a better feel of what we're doing and why we're doing what we're doing. But down here is, and this is just a dashboard I monitor nearly daily, but this is the ETF representation of our physicals. And again, this approach that I follow is tangible assets. Cryptos are not tangible assets. If you want to go play in that area, just realize you're kind of playing in currencies. They're not it's kind of a digital fiat realm, and it's not something that I consider investing. I consider that more speculating. So, I get these kind of comments all the time. Everybody thinks they're geniuses right now, but everybody that was investing in the tulip trade a couple hundred years ago thought they were geniuses too, until everything come crashing down. So it remains to be seen. I tend to invest in things that I've known about for thousands of years, and that's what I'm doing. So GLD is gold, and year to date we're down 1.86%. Platinum is up 13.63% for the year. Silver just broke even the other day. It's up 2.47. We had a really good day the other day. The members got a more detailed report yesterday. Today, and by the way, year to date, residential real estate is up 17.6. So holding the portfolio, which again, I recommend doing a portfolio, not putting all your eggs in a basket like a lot of the silver bugs do, or even gold bugs. If you were doing just silver and gold, you'd be, I'm going to use a kind of a horrible term, sucking hind tit. Notice minus 1.86, 2.47, yet residential real estate's up 17.6, platinum's up 13.63. So you can kind of look at this and kind of see the the percent holdings, and I build my foundation such that if I rearrange this, it'd be residential real estate, then it'd be gold, and then it'd be silver, and then platinum. And that would be, you know, building up on the pyramid here. Now, if we go to the ETF miners, the miners themselves, year to date, ETF miners are up 5.1%. But the improved portfolio, which you get to see these ticker symbols when you're a member, is doubled that. It's 10.27. It's doing fantastic. Now, there's one here on the bottom, the ticker changed, and I got to go back and look at this. This may not be set up exactly right here, but I'll modify that eventually. And that's our VNNHF, which I've told you before, and that ticker's changed. So I'll be talking about that more in the future. I talked about that with the members the other day, but I'll give the regular subscribers some information on that. But if you look up here right now, GDX, and this again, we hold the majority of our stuff in gold when we're in the miners, and these are the large gold miners, and guess what? It's up 10% year to date, and that's why we do it that way. Now, SILJ is in second place. It's moved up very rapidly, but this is kind of on steroids, but we hold considerably less. So you can see right here, the basis was about 15,000 here, but we only hold 3,000 in the junior silver miners, so that's 1/5 the amount. And you can see the large silver miners, we hold more because it's less volatile. So I built the portfolio based on volatility, and that gives us an overall return of 5% because, again, it's like a more mature investing approach. When we look at our improved portfolio, the top part of this portfolio are royalty companies. And then we have some large gold miners, some junior miners and micro miners mixed in, and then some silver as well. But overall, this thing is doing fantastic. We're at 10% return for the year, and that's fantastic. We're not even halfway through the year. We're already at 10%. So it looks like we're going to have a really good year so far. This portfolio is my live portfolio, and this has been live for quite some time. And I'm sitting with, if I click in here, there we go. I've got 42% returns. And this is not since the beginning of time because I rotated out of like this kind of portfolio into a hybrid John Duty and my portfolio, my improved portfolio approach. And so this is, that was in August 2018 or something. I'm trying to remember when I did that. No, I'm sorry, 2019. So anyways, that's a view of the portfolios. This gives you a little bit of a sneak peek. It's fantastic. And, you know, if you become a member, you get more focused videos for your liking. And since things are moving, I'll probably be doing more videos, but we were in a long drawn out kind of sideways slight downward trend, and it looks like we're moving up for a lot of reasons as discussed at the beginning of this video. So I hope this helps you understand what we're doing, and I'll probably break it down in more in the future as folks start coming back on board. That's it for now. I hope everybody's treating you well. I hope you're doing well. Do the best you can. God bless. All right, go potty. We gonna go bye-bye? Are we gonna go bye-bye? Everybody go bye-bye. Yeah. We gonna go bye-bye? Yeah, all right. You going to get in the car? We're not quite ready. I'm almost ready. You almost ready? Okay.